right, so we are now on the calculation part of the trading stock and valuation of livestock related to the taxation on renewable resources. Okay, so as mentioned in that previous recorded lecture, okay, so the way we will calculate or value the livestock will be either the cost price or market selling value. So the valuation of livestock at the end of the year must include any natural increases that are still on hand at the date. This must be lower than the minimum price set by regulation, which is set by Regulation 8. And most commonly used method of valuation of the year-end livestock is average method. So in this example, we have a primary producer who breeds and sells pig. Okay, you can see on the right side the columns there. That is coming from Regulation 8. That's per stock, okay, per number of stock. Now, of course, you can see that it's too low. For the benefit of us calculating this and to follow the Regulation 8, so we'll set this minimum price, but we can always refer to the new regulations which issued by IRC. Okay, so this is how it works. So you have an opening stock of 2,400 which valued 10,000 kina. And then you purchase new pigs, 5,600 at 28,000 kina total value. Now the total number of stocks you have here is 9,000. Okay, you can see that natural increases. That is most likely coming from, of course, if the pigs or the female pig already had birthed for new piglets, then that will be the natural increases. Okay. Now, of course, we don't have the cost of that natural increases. We only knew how many it increases. All right. So you have to calculate that natural increases. Okay. As you can see in the table at the right side, pigs we have 50 toya. Okay. So 1,000 piglets we will assume. Then multiply by 50 toya, we have 500. So you'll get the total cost of inventory on hand and available for sale, 38,500. So if you calculate, so the total cost or the total value divide the total quantity, in this case 9,000. So you will have 4 kina 28 toya as your average cost of pig per unit. Now in livestock account, we will determine how much will be, of course, our profits, the balance of the livestock. Okay, so in this case, we'll go to the illustration. Okay, so same, we still have those stocks here, opening stocks and purchases. You may have noticed on the left side, the natural increases is 0. The reason is because that is already included in profit and loss. Okay, so that's the reason why it's 0. Okay, because it's natural increases, it's actually pertaining to the profit. Okay, it will have an effect when we determine the amount of closing stocks later. Okay, so for example, if we sold 5,400 pigs, okay, and the value of that one is 40,500, let us say that's the price. Okay, and the killed, or we call it rations, are 360. Okay, so we have the value 1,541 kina for that amount. Okay, how you got it? The ration value, you have 360, or the killed pigs. Okay, so we have 360 multiplied by the average cost per unit. And losses on this calculation, we don't have a value on that one. That might be some animals who got sick, or we dispose, or someone have removed that from the pen and then they may have stolen it. So we charge this as a loss. So here we don't consider it here in determining the value of the total value of the amount of livestock. Okay, and then we have closing stocks of 13,525. So to determine the closing stock, we have 3,160 multiplied by the average cost. So we have 13,525 rounded. Okay. So the profit, okay, we can determine by getting all the value on the right side, sales plus kill duration, the amount that we have there, and then the closing stocks. Then compare it with the opening stocks and the purchases. Okay. So the difference will be the profit, right? So that will be we have the total 55,566, and then deduct the opening stocks and purchases. And that's it for my recorded tutorial session. I hope you learned something.